Hi, good day to all. This is Kelvin here again. Welcome to today's Idea of the Day video. We'll be sharing S&P 500 at a key support zone ahead of tonight's key FOMC meeting. So before we start, let's take a look at the disclaimer slides first. All right. So before we even jump into the short-term strategy of the S&P 500, let me share with you all how do I derive the key support level zone of 3840 slash 3580. 3580 will be the lower limit. The upper limit will be 3840. So 3840 is actually this former, in fact, the swing low area of 1st of Feb to 3rd of March 2021 graphically, and 3580, the graphical support is being defined by the former swing high of 3rd of September 2020 and the former swing high area of 6th of November 2020. And what's interesting over here is that if you look at from an Elliott wave and factor analysis approach, the 3580 graphical support also confluence with the 0.618 Fibo extension level taken from the all-time high of 4th of Jan 2022, project it to the recent low of 20th of May, and take it up from the recent swing high of 31st of May that got rejected from a key medium-term resistance at 4217 slash 4310. This gives rise to the 0.618 level, which in terms of Elliott wave perspective, this is the standardized terminal fifth wave target. That means what we could mean that this is the ending point, or we are actually close to the ending point of this major downtrend phase that is in place since the all-time high of 3rd of Jan this year, which is being labeled as wave 1, wave 2, wave 3, wave 4, and wave 5 of an A. So then thereafter, potentially, we could start to see a kind of a multi-month likelihood of a potential multi-month corrective rebound to kickstart that wave B. But bear in mind, this is not a major bottoming configuration yet. Then after that wave B, we could start to see further downside ahead in perhaps in Q4 this year. So now back to the shorter term strategy. So for today's idea of the day video, I'll be using 4610 slash 3580 as highlighted on my daily chart as my key medium term pivotal support level. So as long as this level holds a break above 3840, may see a short term push up in first step towards 3980. But however, if we start to see a 4-hour close below 3580, we will see an extension of this down move towards the next support level at 3470 slash 3430 level. And bear in mind that what we could see is that last few sessions of a steep drop in the SPX 500 has been kind of a seeing a kind of a downside momentum that's being abated by this bullish divergence that's being highlighted on the 4-hour RSI shown at its extreme oversold region.